S&P rallied off the low. We had hammer time, talked about this on Saturday. Obviously, we have a lot to go over. I think we're the best served by going over the basics and just looking at exactly where we are and what exactly transpired. So if we just start with the basics and literally just these levels in here that we've been hitting over and over again, unable to break, and kind of gets you between that 68.20, 68.34, and you're over. Or are you? Are you over just enough to lure you in and then kind of go from there? It feels that way, doesn't it? And then you look at this little suck salad at the end of the day, which you have that negative divergence on RSI. It's not ideal, and it seems to me they want it to be net sellers at the end of the day, and we'll get into that in a minute, in the last 10 minutes, what they did. But is this something that, oh, we're out of the woods? You know, to me, this is all we're doing is rallying back up to Thursday's close, so everybody panics. Then you have the gap up. And then if you look from the gap up off the open, what are we really up? And I think that this is just more fascinating than anything. You're up 50 basis points. So if you didn't buy the bottom and if you bought the open a day later, you're up 50 basis points. And then you look at where you're at here from the low of that bar to where you closed, and it's 3%. So if you're not playing these swings, you have a problem in a market like this. And that's becoming very, very clear. I don't know that you're just going to blow through this. A lot of people seem to think, oh, good, it's over. That's not really how that looks. And there's some stuff out there that we really have to address. I think the most important thing that you could focus on tomorrow with this is going to be those levels. And then if we just take a second, and well, let's do it here with the Qs, so that you can see that 26 for a second. And that 26 level up here, we've been talking about this. It was pure bonk level. We kept hitting it over and over again. Now, we didn't get up there. We got up to that 25. We did get through some key things. If you remember, we went through this in the public pre-market. We do those at 8:15. And we did get through the peak VWAP. But we've been here before and then rolled right under it. And we did that right there. I'm not really crazy about the way we closed, but that could just be people not wanting to take care of anything in the morning that might be going against them, quite frankly. And with the market the way it is, you really can't blame them, because really what you're doing is you're gapping up and then you're gapping back down, and you got a lot of risk up or down with longs or shorts. When we look at these gaps, it's not really that common to have so many so wide. And so what you're getting is those island kind of patterns. If we clean all this off, I'll show you what I mean by this in a second. So you're starting to get those island patterns, right? And we all know how this goes, where you gap up and then you have the gap in here. It's not a true island reversal because you still tagged in here, but here we go again. Now the gap up on the shorts, they didn't want to believe it. Usually this type of day gets like turnaround Tuesday, and then you see how this plays out. And I do have concerns because I don't really like the breadth of the market today. I think it was absolutely gross, for lack of a better term. You had zero follow through on the volume side, and you have an event and no one seems to care about it. If you look at the volume on the SPY too, it wasn't there. Now, instead of going back through the Qs like we just did, I do want to just go through it one more time so that we get this. Let's clean this down. I just want to point this out, that to me, this is the most important level for tomorrow, that 626.18. Over it, under it, you want to pay attention. But the breadth is just, it's not there, guys. And that's where the concern comes in. Now, I consolidated this for time's sake, but what we'll do is we'll take it piece by piece. Here's the New York Stock Exchange, the New York Composite. If we lift that sucker up, take a look at it, you can see that this is where your peak is. You can see the low, and now you're starting to take out the high. Again, you're starting to lift up, but this is today. And it's not really like that great, to be quite candid. And to me, it's becoming more and more of a problem. Now, if we take a look here on the 4 hour and take a look at it from this particular spot, you know, the breadth, it's just not really there. And you're not really getting that push over anywhere. Even with when you hit up at this level, it just rolled right back over. So this is concerning to me. And it's got to get a little bit better. Now, if I got rid of the breadth for a second, and then if I just go to new highs, new lows, this was even more concerning because, and again, this is today, and this is for the New York Stock Exchange, the new lows, I'm not getting anywhere, and this is a net number. So if I really look at this, how many times have we really had net numbers like this? It's not too common for us to be like net at this level. It's really only happened in February, obviously here when we had all that liberation and winning. And then previously in December when we started getting our butt handed to us, right? We started getting some of that in there, which wasn't very nice. Now you need to start seeing those nets change, but we're not seeing that. As a matter of fact, you're seeing it get worse and worse and worse and worse and worse to the point that now we're net negative. And if you really look at net negative time periods, you might get a bounce out of it, and then maybe we'll start getting that net positive, but you can see you need to flip to that net positive before you go anywhere. We're not there. We're net negative and we popped. That usually means that we're doing that for one reason, and we're doing that because of a short squeeze. That's kind of what today felt like to me. Now, there's some sectors out there that make a little bit of sense to me because people were so wrong about them, and we're going to get to that. If you are trying to get in the community, before I forget, please look for a letter today. Some of the people on the wait list will get one. You have 48 hours from when you get it to subscribe. And the wait list is long, so I'm going to try to get through everybody, but it's literally 48 hours like it says. So just please be aware of that. Thank you. In regards to this, I want to go through one more thing, and then I want to show you some names. At New York Stock Exchange Composite, and we see how this is playing out. We can see that we flipped the line right here. This is McClellan summation. And we can see how we're acting right in here, right? We can see how this is going. And it's not great. Like I've seen great before. It doesn't really look like this. The rally up, the retest, the pointing down the moving average, it's kind of an issue. You thought we might get rocking and rolling here, start pushing up, starting to roll over again. And you're getting that kind of wishy-washy kind of milquetoast kind of level that we got over here in late November 24. And I'm wondering if we're going to go through some kind of seasonality again that we had up here. Everyone always tells you that the seasonality is so great going into the December rally, the Christmas rally, everyone gets all giddy. How'd that work out? Not really great, right? So I'm wondering if we're going to start seeing that kind of thing again. And it becomes a concern of mine. So you're pretty much in limbo, in my opinion. I don't know that you would have the need to just constantly run into this. Now, I also think you're getting winners and losers, and we should talk about some of the earnings tonight and some of the winners today. Obviously, the biggest winner out there in my mind was SanDisk after the earnings. They held that 205 level. I'm really surprised they gave us that opportunity on Friday. And if I keep telling people this when we're doing the live calls and the pre-market stuff, and even when I take Q&A, you have to start putting yourself in a position here where you're starting to learn how to do fundamental analysis, because there's a lot of edge in that. So many people are watching the new TikTok dance or watching some dude stand in front of Drake's house with a sign saying, say the word 82. Yeah, that's not really how any of this works. So for me, looking at something like this, when people fully got where the gross margins were, when people that understood this really understood that their guidance was greater than 80%. That's why Goldman's bull case on the stock went to 370. So I don't think a lot of people are getting this on the memory side. I truly don't. They're all like, oh, it's all going to go away. They're sold out for 18 months, like literally sold out, and they keep raising the prices and they keep staying sold out. So I mean, it's literally a dream business. Has it come a long way in a short period of time? Yeah, they're absolute monsters, but that's what happens. When there's massive demand for product and you have this kind of situation where everybody's dead wrong on where they think it should be priced at, yeah, that's exactly what happens. So what do you do with it? Well, that's up to everybody what they do with it. For us, we've been in this name for a while, playing it now. Off of this 205, we had a real nice trade on it. I might do a video on it, how we hedged it, but 200 puts for $1. I'm able to hedge the whole thing for like $5. It was crazy. Fridays are great days to hedge, and puts are so cheap. So especially now, I don't really understand how they are so cheap, but they are. Anyway, so you have something like this, and then you're just ripping again on the day. And people will look at this and say to themselves, oh, I missed it. Again, you want to play where they're going, right? You want to look at where they're going, and you start looking at these names like Western Digital, that we've been talking about these names forever. And everyone didn't want to do this at like 140, and now they'd pay anything to own it at 140, right? And so you really have to watch this stuff. Again, here you are, STX, and you're looking at Seagate, and you're watching what that one's doing, you're watching what Micron's doing. And it's like every single day, if someone's finding a reason to not buy these, and every single day they're just grinding and grinding higher. So I would suggest that this is really the space, memory, and storage. I've gone over this ad nauseum, and it's really an area that I'm just going to continue to focus in, up or down. What bothered me today was the secondary stuff, not so much the ASTS, but I want to go through this. I thought this was a fairly decent call tonight, and I also thought that the earnings were decent, and the guidance was decent. Now, Rocket Labs was also tonight, and to me, I thought this was a really good quarter, and I thought they did exceptionally well. At the time of recording this, we should go through CoreWeave. CoreWeave, at the time of recording this, they have not given their guidance. They said they're going to give guidance on the call, which means the CFO is going to do it. And usually what they do is have the CEO speak and then the CFO deliver the news. If the quarter and the guidance was going to be great, I don't know why you would wait to give that news to the street. You should be able to give that news immediately. So you might want to watch this one tonight or tomorrow, because they're going to shellac people, either shorts or longs. It is almost 5 o'clock. So at the time of recording this, so it's going to be really interesting. Hopefully, hopefully it happens soon because I'd like to be trading that one in a little bit here. So there are your real big dogs for tonight. I did see this BBAI. They seem to be in love with this one after hours. I don't really see the need that I have to rush into things here. The RGTI. I mean, are people really shocked that this thing missed revenues? It's in a strip mall. So like, I don't know. I don't know what people are expecting here. I think the easiest thing to do is to short RGTX. That's what I've been doing. I've been doing it since about 260. It's pretty much been a home run. Very easy trade, but you better understand what you're doing or you're going to have a bad day. So this leads us to what to expect tomorrow. Everyone expects this to just go smoothly with the government, and maybe it will, but we're still not going to get any economic data. And so I think that we're just better off looking at how this all played out today. Did they get involved in some of these names? Yeah, they got involved with these names because they were short, meaning you owned it at 88 and then it ripped. I don't see this as this huge rush in and follow through volume. So in other words, follow through volume is something like this on the 19th of September, where you have this spike in volume and then the next day is twice as much. And you're like, oh boy, they really want to own this. If you look over here, this kind of stuff, here's your volume, like your spike up, and then it's followed. So you have like some kind of follow through to it, something that's commensurate with it. I don't even get that here. And you would think that you'd have some kind of panic. So I'm leaning more towards this was short covering than anything else. And you rolled back over, meaning you didn't hold your levels. So if you looked at something like an AMD, this is a great example of what I'm talking about. So you're opening right around like that. What did we open at? Right around that 242. We'll get the exact price here, 242.14. And if you held, what did you make? $1. So you had to get out. And the only person that really made money was the person that bought really the open and stayed in it all day, right? And got out, literally. We did this trade and got in and out of it when it reversed up here. But, this was tough. This was like a really hard trade. I mean, because the way that these bars were dropping. And that's the other side of this. You're peaking right around when retail stops buying, which is the first hour. And then from there, look at the selling and how predominant it was. And then look at the end of the day. And we're going to get to the end of the day in a second here. I'm going to keep this one short, sweet, to the point. I think you need to watch the first hour of trading and see who's actually buying. And then do you see them following through later in the day? So if I looked at NVIDIA, yeah, after the first hour, you had buyers. And this is where I'm going with this. I don't think it's going to be as clean as people think it's going to be. I don't think it's going to be a rising tide lifts all boats. I think it's going to be winners and losers. And this seems to be what the street seems to think as well. So if I take something like Google, for example, here you are at 290. Here's where the FTC said, please don't ever do it again, right? And that day you opened at what? 226, and since then you're at 290. And it's just been on an absolute tear ever since. So you have an all-time high close on Google on a day like today. You're developing who your leaders are going to be. If you look at that versus something like a Meta that can't get out of its own way, you're starting to see it. And that is what you want to focus on. Whoever was up today and hitting new highs, they become the names that you want to focus on. So you start going through your names out there and you start looking for relative strength. So if you're closed at a high today, that might stay on the list. Tesla really couldn't get out of its own way. Apple completely and utterly rejected 73 today. And you're seeing Microsoft finally try to hold that 500 level. And maybe it does. Maybe it does hold in here. And if we could start seeing some of these bigger names start to hold, such as a Microsoft down in these levels, there might be something to that. And you are seeing it start to really try to hold in here. And there might be something to this, but you have a lot to get through here. But if we can get some stabilization, maybe. But I don't know. I think you have your work cut out for you. Even things like IREN today, when they tried to lift, they just reversed them so fast. And I think that's where I'm going with this more than anywhere. If you look at these movements, let's take this off for a second so I can show you. Open, you do the flush, where you do the 1 minute flush, and then they rip it in your face to get everybody involved. You can see the negative divergence. I actually bought this bar and then trimmed into this. And I'm like, oh, this is finally going to really go. People are going to understand how great of a quarter this was. Apparently I'm the only one, because it breaks, reduces here. And then as soon as it broke here, I'm like, okay, well, I'm at a half. Can't hold the open, rallies back out. I kicked the other half out. And clearly that was the right move. It did not work. And you had no love. And for 13 minutes, you had nothing but retail. And look at the difference on these moves. So is it the secondary names that are just not going to hold? Because it wasn't just that particular name that did that. And you started to see this space again, like CIFR. where it did the same exact thing. So we seem to be a lot of in tandem trading, right? Where that's the same exact pattern you had there with IREN. And of course you had Wolf tonight. And if we go and take a look at Wolf, we can see what that did. And it's the same exact pattern, same superheated. So to me, all three of those names are trading like they're sharing a brain. And I think that might be the problem here for tomorrow. So this doesn't really look like it was that great of a quarter. Maybe they flush it out and then kind of go from there, and we'll see how that goes. Now, the one thing that I really want to bring home is how you can tell what they're doing, meaning how can you tell really what they're doing at the end of the day? And what you do is you use the market on close. And you don't have to look at the market on close number, though people will say that number over and over again. These guys have something called a computer, so they can tell you that what they're doing one thing and then just do it somewhere else. But market on close from 350 over, sure, the pension funds have to do it because they have so much stock. So if you go to 350 today on the market on close, that bar, if you can't get above that bar, then you have institutional net selling at the end of the day. It's just a fact. That's not retail. Retail can't do this. So institutional selling, and go look at the amount of volume that trades in the last half hour. I think it's up to 20% of all volume now in the market is the last 30 minutes. It's something absolutely crazy. So if we're looking at something like this and you can't get over it, you have net sellers. Just like on another day, like if you were looking at this on Friday, for example, let's go and show you what I mean by this. So if I went and looked at this on Friday here, you're going to see the difference, right? And so I'll show you what I mean by this, and then you guys can just do this for yourselves. So here's 348, 349, 350. See how you never broke it? So you had net what? Net buyers into the close. So this is one of the reasons why, if you're in the community, you know this, but like we bought calls on the Qs over the weekend, and I didn't want to just do stock or futures because frankly, you never know what you're going to get. So at least I wanted to limit the risk, and then we just kicked them candidly like right off the open. But we did quite well with the trade. So I think we paid 3, sold them for 9, something like that. Anyway, so the point that I'm getting at is, what do you have today? Well, what you have today is a completely different environment. And it doesn't mean that that's guaranteed that that's what you're going to do, but the same institutions that were buying on Friday are kicking, and you can go through the different exchanges and indexes and actually see it. And so like you can just see that 350 bar right there, down, up 1, 2, 3, down, same exact thing, right? So they are net sellers. And if you go back and take a look at this on Friday, you'll see the exact same pattern there, right? Just different pattern, but same exact pattern you saw on the Qs. Why? Because the institutions are buying on Friday. So you probably want to see what they do on Friday. But from a Monday perspective, this was a tough day. I feel like this day was more to lure people in than anything else. And you had a lot of breaks, guys, like a lot, where names like LEU looked like they were going to absolutely rip up and then reverse, unable to hold certain levels. So you gap up on something like an LEU, you reverse, you can't hold the previous close. That's not the kind of behavior you want to see for any kind of follow through. What we want to do now is just watch the structure on some of these names and see how it develops. But I think if you're going out there and saying, oh, it's very clear, everything's fine, I don't think that way. I think you're better off sticking with your earnings plays. You know, the Rocket Labs was decent. The ASTS was decent. I'm surprised they're reaffirming everything. I'm surprised it's not up more. But you want to be very cognizant of what you're dealing with here. And to just go out there willy-nilly and say, oh, that's it, we're definitely done, I think you're doing yourself a disservice. And I'd watch that 626 level. That is it.